Hi and welcome to this week's Property Insider video. Today, Dr. Andrew Wilson takes a very deep dive into the monthly data. So apart from what happened just in the last week, he's going to go into what's happening to building approval, to loans, to our property markets, to rents and to asking prices. So if you're interested in property, there's lots for you in today's show. But if you want to keep up to date with what's happening in property, please subscribe to this YouTube channel and click the little bell icon so we can keep you up to date with all the latest data. Well, that could have been worse, couldn't it? We've been through a pandemic, a recession, a property lockdown, and we've made it through quicker and easier than most predicted. We've beaten the recession, we've contained the virus, we've opened our borders, and the path to COVID normal has come along faster than expected. And of course, that fiscal cliff that people were worried about was more a gentle step down before we ascent up the property ladder again. And the good news is that Dr. Andrew Wilson's views on the economy, on our property markets, that we've been sharing here each week on these Property Insider videos, they've been very accurate. Now, with almost all the data that we're going to get in with us today, we're in a good position to understand what 2020 has left us with. So I'm looking forward to taking a deep dive into the monthly property data with Dr. Andrew Wilson, Australia's leading housing economist and chief economist of My Housing Market. Hi, Andrew.
Well, thank you for those kind words, Michael. Yes, it's been an interesting year, has it not? And I guess maybe we can look forward to a more benign year next year in terms of the roller coaster ride, but who knows?
It would be nice if it was a little bit less exciting next year.
Yes.
Now, a lot of data's come in, as often does at the beginning of the month, as well as that you've got your monthly data that you're going to share. So let's get on with what's happened in the property markets, Andrew.
Well, thank you very much, Michael. Yes, the week that was in property, and it was a big week. We've had a lot of data released, particularly from the ABS over the past week. So we need to move through quickly to understand what's been another very positive period for our housing markets and our economy. As usual, we'll start with our weekend auction market results. Across the board, strong results continuing in all our capital cities. Sydney recorded another 80% plus clearance rate at the weekend. That's two in a row. I guess we could roll out the B word, which is boom. Not sure we're getting booming house prices at the moment, but certainly sellers would be very happy with those 8 out of 10 plus chances of selling their property under the hammer each weekend in Sydney. Listing numbers also similar to where they were a year ago. Another solid result in the Melbourne market. It's consistently tracking above 70%. Listings well down on a year ago, but the Melbourne market's got plenty of pent-up energy to be released, both from buyers and sellers, and we'll see that happening next year. Brisbane, back-to-back, 60% plus. In fact, Brisbane's been tracking above 60% clearance rates for quite some time now, which is very unusual for that market. Typically, we see high 40s, low 50s, as you can see from last year. But it's been a very strong market. We have some other data that will reflect on just how strong that Brisbane market is at the moment. Adelaide down a little bit last weekend from its recent strong results. Also Canberra. But those two markets have really been, particularly Canberra, have been the top performers in terms of auction clearance rates for most of the pre-COVID periods. We can see there Sydney's clearance rate trend on the rise again. Of course, everything shuts down at the end within the next 2 weeks as we move into the Christmas break period. The Upper North Shore in Sydney was the top performing region. Clearance rate just under 90%, but most regions reported 80% plus clearance rates at the weekend in Sydney. Top reported sale in Sydney was 35 Ryries Parade Cremorne there on the Lower North Shore, just over $6 million. The Melbourne market moved through the roller coaster now, as you can quite clearly see on that trend, and now just holding above or in the mid-70s% clearance rates, but plenty left in that Melbourne market that'll be released next year, in my opinion. Northeast, top performing region in Melbourne, 75.1% clearance rate, but very consistent there, most clearance rates. In fact, all clearance rates above 70% in Melbourne last weekend, and not a lot of difference between the top and the bottom in a very consistent auction market performance at the weekend. Surrey Hills has been a leader in top reported sales over the past month or so in Melbourne. Again, number one with 7 East Street, Surrey Hills selling for just over $4 million. And number 3, 7 Lura Street, Surrey Hills at just over $3 million. That's the top 10 sales in Melbourne reported at the weekend. So that's the auction market onwards and upwards. It will all close in a fortnight's time and then resume in February, but no doubt that it's a very heady market at the moment. Let's look at the new listings data that we do every week. These daily new listings reported over the past week. We can see, not surprisingly, that the trend is now downwards. This is the seasonal effect, particularly from auction activity, that's pushing the number of new listings coming into the market downwards. No surprise there, but new listings are still tracking around about where they were in the pre-coronavirus period. But as I said, that falling away over the past month or so is clearly the easing for the seasonal shutdown, mainly from new auction listings, which of course have that longer lead time. We can see compared to last year, however, new listings are still tracking well ahead of the same period last year, reflecting on how the market in terms of the seller equation is tracking higher than a year ago and is particularly strong. Melbourne and Sydney new listings down over the past week quite sharply. Again, as I reiterate, that reflects mainly a lack of new auctions coming through, because of course we typically have around about a 6-week lead time into auctions, and 6 weeks from now, of course, is the middle of January, so there won't be any auctions then. That's why we're seeing that falling away in new listings in Sydney and Melbourne in particular, which are the epicenter of auction activity, as we know. New listings, however, in Melbourne are now well ahead of Sydney, nearly 50% more new listings than Sydney over the past week. Total listings, so this isn't just new listings, this is total properties for sale at the moment in the market. And we can see there that new listings are also falling. There were many predictions made earlier in the year regarding COVID that we would see a flood of properties just sitting for sale in the marketplace. We're seeing the opposite now, of course. We're seeing fewer listings, and part of not just the reduction in new listings, it's also that properties are selling, and that's reducing the volume of new listings in the marketplace at the moment. Melbourne, again, similar to new listings, total listings, Melbourne around about 24% more than Sydney at the moment. So Melbourne's really recaptured its mantle as, I guess, the top performer in sense of the number of listings. So that's the listing side of the equation. Let's have a look at sales. Sydney sales are holding quite strongly there, just below where they were at the beginning of the year. So a consolidation of what's been a strong selling season over spring in Sydney, particularly over the last month or so. Melbourne, a big surge in new sales. That's that pent-up energy being released, which will continue to, I believe, be released next year when the season reopens in February, and still below where we were at pre-coronavirus in terms of newly reported sales, but certainly surging at the moment. There's plenty of appetite for property in the Melbourne market at the moment. Brisbane's the superstar, though. Really strong results for the Brisbane market again at the weekend. These are newly reported sales over the past week, well ahead of the beginning of the year. We always mention that Brisbane is the second half of the year market, and it's really reinforcing that now over and above the fact that it is actually just very strong regardless of those seasonal impacts. So big result for Brisbane. And we can see there that Melbourne new sales increased by 13% over the week. Brisbane steady or marginally down by 4%. New sales now in Melbourne are higher than Sydney for the first time in a while. Around 5% more new sales by volume reported in Melbourne compared to Sydney. So again, new listings and new sales in Melbourne are the highest of any of the capital city markets. This time of the month, Michael, of course, we do the monthly update of the latest data. We'll start with the rental market. We can see rents for units are still falling. We know that the reason behind that, as we've discussed, is that increase in supply, particularly from Airbnb, switching from holiday to permanence in a suburban unit markets in Melbourne and Sydney, and reduced demand particularly from first home buyers, and of course that lack of the nationals coming into our marketplaces. House rents continuing to rise, so it's really a two-paced market between houses and units at the moment, continuing with higher rents for houses and lower rents for units. Vacancy rates validate that. We can see vacancy rates still quite low for houses, but vacancy rates for units in Sydney and Melbourne are at record levels and rising, and that of course is why we see downward pressure on rents for units and upward pressure on rents for houses. House prices, Sydney's median asking price over the month up by 1.1%. No surprise there with strong auction clearance rates. Melbourne steady over the month, Brisbane up by 1%. Units also, by and large, produced positive results over the month in terms of increases. So the economy, busy week for economic data last week. We start as usual with the All Ords. All Ords has built ahead of steam really since the budget and the cut in interest rates announced a month and two ago. And maybe we'll see the All Ords pick up to where it was prior to the coronavirus by year's end. Always risky to predict the direction of the share market, but certainly it's got a lot of momentum at the moment and may get back to where we were pre-coronavirus by year's end. But certainly these are positive reflections of investor sentiment in Australia's economy with that rising share market. Australian dollar also quite strong at the moment. In fact, exceptionally strong at the moment, well above its highs of recent years. And although, again, it's a positive reflection on investor sentiment, international investment, the sentiment in the Australian economy, there is also some weakness in the US dollar, which is driving that as well. GDP, well, we're out of recession, hip, hip, hooray. It was very short-lived, of course, and it was all about that June quarter decline down 7%. And really, we're only just below the line in that March quarter, which gave us the consecutive declines in GDP, which is the definition of a recession. But really, it was all about the June quarter. So I'm not sure this is really something we should have called a recession anyway. It is just a black swan event that pushed economic activity down over one quarter. And of course, there hasn't been much chat about the end of the recession or the fact that it was just really a one-off June quarter event, because it's not bad news and we know bad news sells. But we've still got some way to go to reflect or to recapture what we've fallen in GDP, down 7.3%, up 3.3%. So hard yards to come, but we're certainly heading in the right direction. This is the October retail sales data, tracking higher than where they were prior to the coronavirus shutdown, of course, in autumn. Retail sales surged in Victoria, no surprise, as its housing market is bouncing back and its economy. We're also seeing retail sales rise in Victoria. However, retail sales turnover since June is still down in Victoria, up everywhere else except South Australia, which is flat. So there's plenty of upside potential, which we will see for increased activity in retail sales in Victoria. Home loans were also reported last week, remaining at record levels. Interesting, we now have investor activity well below that of first home buyer activity. So that's quite extraordinary that investor activity is now at a lower level than first home buyer activity. Victoria still lagging in terms of home loan activity. It was down 11%. I think we'll start to see that reversed over coming months. New home loan activity in Victoria up everywhere else. So far this year, strong results across the board in all states for home loan activity compared to the same period last year at record levels. As I mentioned before, first home buyer loans in Victoria down, similar to total loans. There's a lagged impact in terms of the recording of home lending, reflecting what's happening in the broader housing market and economy. And I expect to see that turn around quickly in coming months. But everywhere else, strong results continuing for first home buyers across the board. Queensland, the best performer this year so far for first home buyers, up by nearly 40%. So those stimulus packages at the federal and state level are really bringing a surge in first home buyer activity across the board, and soon to be enhanced by a Victorian revival. And we can see we're still below where we were in terms of first home buyer activity, still below where we were during that very strong period in 2009 and 2010. Victoria down with home lending for owner-occupiers and investors over the month. Everywhere else was up except Western Australia, where investors' activity was falling away again over the month. Important part of the surge in home lending over recent months has been lending for new home loans or for new homes. Of course, that reflects that the federal government's home builder scheme, which has now been extended into March. So still surging loans for lending for new houses over October. And we can see there that Victoria remains the top performer for new home lending, which we do see typically over October, these loans for building a new house for a new home. Building approvals were also out last week. Perth was the big performer. Sydney and Melbourne a little flat over the month, a surprise, but Brisbane was up quite solidly, and Perth is really booming at the moment in terms of new home building approvals, new house building approvals. We can see that houses up across the board this year to October versus the same last year. Units, with the exception of Melbourne, from a low base, basically are continuing to fall. And that's the issue we have, I guess, in terms of balance in our housing markets, is that we're still very low in new apartment building, which is an important contributor to the economy, well below where it was at its 2016 peak. But we can see, compared to houses which have recovered strongly through that home builder scheme from the federal government. But even so, the level of house building at the moment is still below where it was in 2018-19. Might get back to that level, but certainly it's not going to be an extraordinary period in terms of the number of new houses being built. So that's all in a very busy week for data, Michael, and we look forward to the next release over the coming week. I'm not sure we'll get quite as much to talk about.
But Andrew, there was one bit of data that I read a couple of days ago that you missed out, and that's that luxury car sales are up 12.4% this year. So not the cheaper cars, but the higher end, more expensive cars, where interestingly, the government makes lots of money as well because they've got those high import duties. What does that mean? Does it mean we've got a bit more money stashed away, we can't spend it overseas? Or do we think we need a reward for having got through 2020?
Well, I think the reward element is part of the story, Michael. So I think that the government's write-off allowances is also part of the story. Let's take advantage of that. Although I think that cuts out at around 60,000 for a new car, but I'm no accountant, so don't take that as gospel. But yeah, look, it's all part of the package, and good news for those dealerships that have been struggling, Michael. Early Christmas presents, perhaps, and we deserve it, I think, don't you?
Sure. Now, there was also, I read these statistics from the Commonwealth Bank. They showed an interesting chart where they showed luxury car sales and rising house prices. And interestingly, there was a trend. I'm not sure which is the leading indicator. You buy houses first and then you buy the car, or you buy a car first and you buy houses. But anyway, it looks like 2021 is going to be a better year for all of us. So I look forward to catching up with you again next week and seeing what's happening in our property markets.
Yes, and if I could just add, Michael, let's hope the Commonwealth Bank is improving its methodology in terms of predicting the housing market, and maybe that's part of the new models it's going to use. So good luck with that, guys. You can only do better than what you've done recently. Thank you, Michael.
Thanks, Andrew.